love the channel and find it useful in becoming a happy retiree. Subscribe today. Let's talk about what we see as far as the next year. We had a bunch of calls in the 9 o'clock hour relating to the GOP tax cuts. We've done several shows on this. I've done a Facebook Live on this. We've taken many questions on what we think it will mean for for Americans. And from what I can tell, 90+% of folks are going to get a tax cut. Call it the other 10% or the other 9% are going to get tax going to be basically flat. And then there's a small sliver of the population where taxes might go up a little bit. The lower end of the upper middle, the upper 1%. If you're a high income earner and you're filing single, you don't have kids. That's the one group I see that's losing a bunch of deductions and not making up for it on the bracket side. So, with most of Americans getting a tax cut, it goes back to what this economy looks like. So, let's start with, and there are 8 items that I believe will shape markets or have a big influence next year. In 2018. I published this, of course, at wesmoss.com. So go to wesmoss.com and you can go into the Money tab. You will see these 8 items if you miss them. What's happening in the world here, 2018? So again, I don't think there's any question about next year, meaning that all the folks we talked about that we've already talked to on air, you've heard, they're getting a tax cut. That tax cut's going to be cumulatively, all the folks, all the families getting the cut, $120 billion. Corporations, $85 billion. Put it all together, you're over $200 billion in economic stimulus. That's the largest tax reform plan, or the second largest we've seen in U.S. history. Could turn out to be the most stimulative, but the largest only behind Reagan's 1981 cuts. And I would say decidedly larger than the Bush tax cuts in 2003. Decidedly. To put that into perspective, let's go back to what happened in 2002 and 2003. GDP was running, GDP growth, gross domestic product, running growth rate around 1.5%, 1.5%. Following the tax cuts in 2003, GDP skyrocketed to 4%. 4% doesn't sound like a big number, but going from 1.5 to 4 is a big deal. And then it stayed above 3% for the following 2 years. I don't see why we don't see. I expect to see something very similar over the next several. We've seen GDP over the last couple of years average around 2%. It's recently started to tick up in the last couple of quarters, but it's averaged around 1.9, call it 2% in 16, 17. And of course, longer term, the impact is dependent on if corporations really spend the money that they're saving. But you're going to see corporate investment happen. You're going to see these new tax provisions that allow 100%, by the way, of expensing. So you buy a big machine as a company, you can expense 100% of it over the next 5 years. So that's a big deal for corporations, and it's going to influence them to spend more. So it's not just you spending more because you're saving a couple $1,000s. Maybe you save half of that, maybe you spend half of that. It's companies doing the same thing. You put all that together, you're going to see a lift in gross domestic product. The question is how long that will last. Will it last a year, 2, 3? I think at least it gives us 2 or 3 years of stimulus before we see it just start to tail off at all. And beyond that, you can't predict any further than that. So we're talking about the outlook for of course, for 2018, where we think the economy is going, what that means for interest rates, what it means for the market. So of course, if you have all these tax cuts, $205 billion is going to be stimulative to GDP in 2018, no question. Should be in 2019, should be still in 2020. And at that point, the structure of these tax cuts will either take hold and there's a whole new level of stimulus and productivity and entrepreneurship and animal spirit that just takes hold. And we get even more productivity out of the demographic base that is slowly growing. And we are in a demographic environment that's still net positive in the United States. It's not like that in every country around the world. And that's another thing that gives me optimism about 2018 and the next several years, is that we still have strong demographic underpinnings. And that doesn't get talked about a lot, because we're always focused on what's going to happen next week and next month. But you still have to have demographics supporting, so population growth from, again, new births, life expectancy, and immigration. Those three together have to create a population that is expanding, along with productivity, which we continue arguably to get. Maybe not what we've seen in the last several years, but still a more and more productive base, and you get economic growth. And that's good for earnings, and that's good for markets. Let's go back to, there's a lot happening here on the show here today. We've just talked about inflation, which goes to really number 2 on my 2018 outlook about interest rates. So it was a great call from Walter, who just said, wait a minute, Wes, you're talking about the economy getting better. What about inflation? Very important to think about, and it goes back to what interest rates are going to do. And we are finishing up outlook for 2018. We talked about number 1, tax cuts spur the economy. 2, interest rates continue to go up. And when I say continue, they really started to go up as recently as this fall. So Federal Reserve, again, they hiked rates 3 separate times in 2007. We believe that's going to continue in 2018. As recently as September, the 10-year Treasury note hit just at 2% and closed the year as of, yesterday at just over 2.4%. So we've seen a gradual rise. And because of these tax cuts, we could get a little bit of inflation, could set the Fed on an even more aggressive hiking pattern. Remember, going back to looking at the 2003 tax cuts, the 10-year yield rose from 3.1 to 4.6 in less than 2 months. So we could see that. Number 3, I do think that the market slows down. I mean, no question that we could have another good year. Earnings are supposed to be in the $155 range, up from where we were this year in the $135 range. So remember, that's really what drives markets. It's about earnings. It's about profits from big corporations. And there's no reason that doesn't continue into next year, particularly with the tax cuts that take earnings estimates that were 145 all the way up to 155 with the new tax cuts. So the underpinnings of a good economy, no question, are there. The underpinnings of a good market, again, they're still there. But we had such a strong 2017, hard to see that a repeat of that. But again, I don't expect a bad market in 2018. Certainly more volatility. We already talked about Bitcoin. I think at some point the music stops there and we get a return to the real world. And I think that you're seeing some sort of bubble. Well, it is the biggest bubble I think we've ever seen in financial markets. The size of it is not as big, but the exacerbation of something that has zero value to have such a enormous run up is the most extreme that I think I've ever seen. And usually at some point the music stops with that and it returns back to earth. Number 5, I think you're going to see some infrastructure. You may very well see an infrastructure bill. The Trump administration has been talking about that for a very, very long time. And I think you get something in 2018 when it comes to infrastructure. We don't have time to cover this, but in the outlook for 2018, I think the technology gets targeted to some extent, and I think energy and defense have a lot of merit in 2018. And then I think that international investments may very well continue. So all that, you can just find it on wesmoss.com. It's already published under the Money tab. Again, if you're looking for either some inspiration for New Year's, and as you're doing your New Year's planning, I just launched retiresoonerbook.com. It's a website where you can retire sooner than you think The book and the audio CDs are less expensive than they would be on Amazon. So go to retiresoonerbook.com. Paperback under $10, audio CDs under $13. You can get them together. Couples can get them together so you can read it and listen to the book for under $20. I don't know. Sounds like an awesome deal to me. Again, the website on that is retiresoonerbook.com. It's so exciting to go into the new year after a very solid 2017. I wish you such a wonderful 2018, a profitable 2018, and God bless. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.